Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value, and what I'm going to do here is give you an update. I'm looking at crude oil stocks in millions of barrels and days of supply. The blue line that's behind me, here we can scroll here, shrink me up a little bit. So what we're looking at here is the crude oil stocks in million barrels and days of supply. The blue line is what we're looking at, and the grayish line is the historical area or the 5-year range that we would be looking at over the past 5 years. And what we've seen is that we had a lot of inventory in July 2020. And then this inventory's continually gone down outside of March here, but it's continuing to go down, and we're starting to enter the bottom 5-year range of inventory, which means prices are going to go up. So we're continuing to see a tightening over time of inventory. And whenever you see a tightening of inventory, prices go up. And we see that with real estate. We see that with any commodity. So oil over the long term is going to see upward pressures until inventory stabilizes or turns to go back up. Now, looking at an article that one of the commenters had put in here, thank you for putting this. I think it's Leah Goring on the many factors sending oil prices higher. I was looking down here. I read the article. There's no buying taking place with long-only fund managers in the oil space. However, that is going to change because the underlying fundamentals in the oil market are excellent. And there's several issues in the oil market today that very, very few people understand. And this is what we're going to go over. I want to make sure everybody on the channel understands this. In fact, I would say that next year we're going to enter a situation in global oil markets where we have never, ever been before in the 160 years of history of oil since it was discovered back in Oil Creek, Pennsylvania, 1850 by Colonial Drake. So we are going to enter a phase that we have never seen before in the oil markets, ever. So let's jump into it. So in the global oil market, there's always been what I call a structural surplus. We've never actually had a deficit in oil. There's always been more supply than there's been demand. Even back the two energy crises in 1970, the 73 oil embargo, and 78 and 79, the Iranian hostage crisis. We've always been in a surplus. There was a temporary supply disruption, but there was never a situation where there was more demand than there was oil supply. However, based upon our modeling going forward over the next year, given the fact that global oil supply has now fallen by about 2 million barrels a day, specifically outside of OPEC, that if we ever get back over 100 barrels of global oil demand a day, which we think we're well on the way to have that happening, that next year we're going to be in a situation where we're going to have 101 million barrels a day of demand, and we may only have 100 million barrels of oil supply. And that's everybody flat out pumping. This is not OPEC. OPEC's not going to make this up. That's them. This is everybody flat out pumping and the demand exceeding the supply. And like I said, we have never been in that situation before in global oil markets. How oil prices react to that is going to be very, very interesting. But that's the setup. And there's also something else that's very interesting about oil. I don't know if you followed the various news headlines last week that the IEA, that is the International Energy Agency, which is sort of a global energy watchdog group that monitors global oil markets for the OECD countries, the IEA came out with a grand pronouncement that they're recommending that all oil companies cease upstream capital spending starting now. So we're already supply constrained in oil because of the huge cutbacks in capital spending that have taken place in the last 2 years, and the fact that the shales, which have been 100% of the world's supply growth over the last decade, have now stopped growing for a lot of the interesting geological reasons. which we've written extensively about in our letters. This is only going to further crimp global oil supply going forward. And so the setup for oil, which, like I said in our last call, we outlined that had fallen firmly into the bucket of being an uninvestable asset, is now going to wind up being the star performer in this coming decade as we progress through the 2020s. And that's this opinion of this article. And what I find the most interesting is that we are coming into a period where we could potentially see a supply-demand deficit in oil, which we've never seen before. That's the key takeaway here that everybody on the channel should know. I am just sitting in this stuff. I think I've called this before, that we could potentially see raging demand come back with people's accounts full of money, stimulus money, and a decrease in investment in oil. Now, I don't know if oil is ever going to really peak much past 100 million barrels. That was kind of a peak oil supply number, was in the low 100s for some people. Some said 110 million. I don't know if we're at peak oil, and geologically we could throw a bunch of money at this and it still won't matter. But we're going to find out. We're going to find out what happens when oil demand wants to go up and the oil's not there. We'll see how high prices are going to get, and we're going to see who gets priced out of the market first. And we'll see. We'll see if we see shortages too. I don't know where these shortages are going to come up in the world, but it would be a very weird world if you go to the pump and there's no gas there. I don't know if it's going to get to that extent. We'll see what happens next year. But I'm staying long. I'm not trading in and out of my oil companies and energy companies. And we'll see what happens. If you guys like this content, give me a thumbs up. Thanks for listening. This is Finding Value.